When you hear the term CFD trading, what comes to mind? If it feels confusing, don't worry. Today, I'll quickly explain what CFDs are, how they work, how they compare to traditional assets, and what to look for in a reliable CFD broker. By the end, you'll have a clear and simple foundation that can help you make more informed decisions. Today, we're breaking it down in a straightforward way. Let's get started. CFDs, short for contracts for difference, are agreements between you and a broker to exchange the difference in an asset's price from the moment you open a trade to the moment you close it. Put simply, you're predicting whether the price will rise or fall without ever owning the actual asset. Sounds great, right? And there's even more. But before we go on, be sure to like, subscribe, and turn on notifications so you never miss our expert guides. So, how does CFDs work? Let's break it down into a simple example. Every asset, like oil, gold, or a currency pair, has a price that's measured in a currency, usually USD or Euro. For example, crude oil might be trading at 59.45 cents. When you trade a CFD, you're not buying the actual asset. You're simply predicting whether its price will go up or go down from that point. If you think the price will rise, you go long. If you think it will fall, you go short. And if the market moves the way you predicted, you profit from the difference in the price when you close the trade. And that's the core idea of CFD trading. You're trading the movement, not the asset itself, giving you the flexibility to benefit from both rising and falling markets. The question is, why should you consider CFDs over other types of trading? The biggest advantage is flexibility. CFD trading makes investing accessible, even if you're starting with a small amount of capital. With CFDs, you can trade on margin, which gives you leverage, meaning you can control a larger position with a smaller deposit. This is different from traditional stock trading, where you must buy and hold the actual shares. Another advantage is that CFD trading allows you to profit from both rising and falling markets. In traditional stock trading, you typically only gain when the price goes up. With CFDs, you can capitalize on movements in either direction across a wide range of markets, from stocks and commodities to currencies and even cryptocurrencies. Everything that has advantages also has a catch. Here are a few things to keep in mind. Leverage can boost profits, but it can just as easily increase losses. Use it carefully. Misunderstanding what drives market prices or ignoring analysis tools can lead to poor trading decisions. Remember that successful trading comes from discipline and informed choices. Don't let emotions and impulsive actions take over. Rely on strategy, knowledge, and patience instead. So, how do you get started? Here are the basics. First, choose a licensed and regulated broker. Make sure they offer competitive pricing, tight spreads, and low commissions, like FXGT, for example. Next, complete your registration and provide the necessary documents for verification. Then, familiarize yourself with the trading platform and the instruments available. Do your research and plan your strategy. Study the markets you want to trade in and develop a clear approach. Practice first. If you're new, start with a demo account to trade without risking real money. Then start trading with a funded account. Monitor markets closely, stick to your strategy, and always use proper risk management tools to protect your capital. Now that you know how to start trading CFDs, let's talk about what really matters when choosing the right broker. First, make sure the broker is regulated. Regulation protects your money and ensures you're trading in a fair and transparent environment. Second, look for a user-friendly platform with intuitive charts, indicators, risk management tools, and reasonable fees. A strong platform makes your trading smoother and helps you make better decisions. Third, consider the broker's customer support. You need a team that's reliable and available whenever you need assistance. And finally, a strong broker provides educational resources to guide you as you learn, things like blogs, market insights, video tutorials, and platform guides. Let's wrap it up. CFDs let you trade price movements without owning the assets. With leverage, you can access more market opportunities using less capital. CFDs are also flexible. allowing you to diversify your income and benefit from both rising and falling markets. But remember, like any form of trading, CFD trading carries risk. Take the time to learn the fundamentals and choose a reliable broker that matches your trading style and goals. That's it for today. Don't forget to like and subscribe so you're always in the loop. Here are 2 more videos you might like. See you next time.
FXGT, where traditional meets digital.